Welcome everyone. My name is Edward James. I'm the Director of Content and Analysis at MEED Projects, and welcome to what is our first MEED Projects webinar of the year. And in this presentation today, I'll be going over the 2020 full year data, looking at how the market in the GCC performed last year. Obviously quite a challenging year, difficult year for everyone. And then also, of course, looking at the year ahead and looking at the forecast for 2021 and see how the market is going to perform. Now, this presentation is quite detailed, quite a large amount of data in it. So we are recording it, and we will be sending this presentation to all of you who have registered for this event. So you will be able to look at this PowerPoint, these slides in your own time. We'll also be making a video of it, and we'll be putting the video up either on our website or on YouTube for you to watch again if required. Now, just as ever, we're going to have a short presentation of maybe about 20, 25, 30 minutes. And then afterwards, I'll be taking some questions from you, Q&A. You'll see in your Zoom menu bar, there is a Q&A chat section. If you want to submit any questions for us to answer after the end of this presentation, please ask them in the Q&A chat box. As there are so many people attending today, I would suggest that you ask any questions you have sooner rather than later, so that there will be, if we run out of time, I'll have hopefully answered your question. So please, throughout the webinar today, please submit your questions in the Q&A box. Okay. Now, one final thing is that we have something a little bit new today during this webinar, and as a thank you for registering and attending today, we will be offering a free gift to all of you who are attending live today. I will share details of the gift at the end of my presentation in about 20-25 minutes. So stick around, and I'll be sending you. I'll be highlighting the gift and how you can get it once I'm done. Okay. Without further ado, let's skip to the next slide. Just taking a quick look at MEED Projects, just to inform you, for those of you who don't know what it is. So the data today in this presentation is sourced from MEED Projects. MEED Projects is an online projects tracking platform. Subscribers can track more than 15,000 active projects in the Middle East, Central Asia, and all of Africa now. So it's by tracking individual projects each worth more than $10 million that we are able to quantify trends, issues, and how the markets are performing, both historically, currently, and in future. And so it's a very valuable tool indeed to be able to do analysis on the projects market. If you want to find out more about MEED Projects, then you can just go onto our website. The link is in the page here, www.meedprojects.com. Anyway, I'm highlighting this because this is where the data in this presentation is all coming from. Okay, so let's start by looking at 2020. We've obviously finished the year. Most of us are happy to put it behind us. And as we look forward into slightly, hopefully, better circumstances in 2021. But let's look at how the market in the GCC performed in 2020, how COVID-19 affected it, and overall how each country and sector did. So first of all, just let's put everything into context. Over the last decade, we've seen more than $1.5 trillion worth of contracts awarded in the GCC in projects. And you can see clearly here that the two largest markets, not so much of a surprise, are Saudi Arabia and the UAE by quite a large margin. They historically have been the two largest projects markets in the GCC, followed then by Qatar, Kuwait, Oman, and then Bahrain. It's important just to note that although Qatar, Kuwait, and Oman are still are smaller than Saudi Arabia and the UAE in terms of historical performance, they are still actually pretty large projects markets in their own right. It's important to recognize that there is still quite a lot of project activity in those markets, even if they are smaller than Saudi and UAE. Right, let's look at 2020. How did the projects market perform in terms of contracts awarded in 2020 compared with previous years? And as you can see here from this graph, it was a quite challenging, well, very challenging year for the projects market in the GCC. We saw just under $64 billion worth of contracts awarded in 2020, and that's more than 40% fall on the $110 billion awarded in 2019. So we can see a very sharp impact from COVID-19 and falling oil prices. We saw a big slump in contract activity, new contract awards, and actually it was the worst year for contracts being awarded in the GCC across all sectors since 2002, 2003. So yeah, it was obviously a very disappointing performance. Perhaps not a surprise to many of you who would have seen a decline in project activity, a slowdown in RFPs and existing work, and the numbers here speak for themselves. It was a very, very difficult year for everyone, and as you can see, 40% year-on-year fall. Now, obviously, we can see here as well that we had a peak in 14, 15, and 13 to a lesser extent. There is a correlation between the oil prices and project values, and as you can see, as the oil price started falling in late 2014, it started having an impact in project awards from 2016 onwards, and we have been in a kind of decline anyway in projects market activity, and so 2020 wouldn't have been a great year with or without COVID, but with COVID, the market was pretty down. So that's the stark picture painted by 2020. Let's go to the next slide. However, although the projects market fell quite considerably in 2020, it wasn't necessarily the same picture or the same situation in all markets and in all sectors. Now, this is quite an interesting graph. So this shows the value of contracts awarded in selected MENA states in 2020 compared with 2019. And as you can see, the two largest markets saw very sharp falls in project activity. Saudi Arabia maybe 2/3 down on the 2019 figure, and the UAE nearly half as much as it was the previous year. So you can see these were by far the two biggest markets affected by falling oil prices in COVID-19, albeit they had the biggest to fall, being the two biggest markets, but they're also the ones which have suffered the most. They're still the two largest markets in the region last year, just by a small margin. But if we go and look at other markets, say Egypt, Qatar, Oman, Algeria, Kuwait, you can see actually that the project markets in those geographies were not as badly affected. And in fact, in Egypt's case, it was flat, down a little, only a little in Qatar, only a little in Iraq. Oman is actually up on the previous year, as is Algeria and Kuwait, albeit from much lower bases and a much smaller starting point. Nonetheless, it's not possible to say, looking at this data from MEED Projects, that each country or each market was as affected by COVID-19 as others. There are various local issues and drivers which are pushing the projects market other than the macroeconomic situation or COVID-19 or oil prices. For example, in Egypt, there's a real estate boom driven by fast growing population. In Qatar, we've got the forthcoming World Cup next year, which is necessitating huge investment in infrastructure. In cases of Oman and Kuwait, we're coming from a very small base, and so just a couple of big projects can make all the difference in a particular year. So I think it's important when we're talking about 2020 and the impact of COVID-19 not to overgeneralize on the situation in each country and market. Before I go into the next screen, just a reminder, this presentation is being recorded, will be sent to you in a couple of days' time. Once we've got all your details and everything, we will email that out. And also, just to repeat, there is a prize, a free prize for everyone who attends today, which I will reveal and give you the details of at the end of this presentation. And also, just a reminder, if you've got any questions, please fill them in the question and answer box, and I'll answer them once this presentation is over. Right, so we looked at the data historically on a country level. Now let's look at the data on a sector basis. So this is the 10-year performance of contracts awarded in different sectors, and you can see clearly when it comes to the GCC construction, which is villas, offices, towers, malls, hospitals, schools, theme parks and hotels, is by far and away the largest single sector in the region. Again, not a surprise maybe, followed by transport, which has seen more than $250 billion of contracts awarded over the last decade, then oil, power, gas, water, industrial and petrochemicals. But you can see that construction is by far and away the largest single sector. Okay, now let's look at individual sectors last year. So this slide, like the previous two, one before the last, highlights the contracts awarded by sector in 2019 compared with 2020. And you can see here how some markets have performed, some sectors, sorry, have performed a lot worse or a lot better than others. So construction, which is historically, as we just saw, the biggest single sector in the projects market, has declined considerably in 2020 by being less than half what it was in the previous year. So construction along with gas are the two worst performing sectors last year in terms of year-on-year falls in activity. Oil, industrial and water to a lesser extent, and petrochemicals also fell year-on-year. On the other hand, we actually saw an increase in project activity in the transport sector, going above $50 billion, and also in the power sector, particularly in renewable energy, solar energy in particular, also growing year-on-year. So again, just like on an individual country level, it's not possible to overgeneralize around the impact of COVID-19. Each market and each segment of the market is slightly different, different drivers, different local situations that have an impact on project spending, whether it's on a country level or on a sector level. So if anyone's got any doubt about the impact of COVID-19 on the projects market, obviously we saw oil prices fall quite considerably last year as a result of the worldwide pandemic and lockdowns. But if anyone has any doubt about COVID was a major driver for overall project spending declines, then I hope this graph, this data from MEED Projects puts that issue to bed. So in the 6 months or 5 months prior to the first lockdown in March last year, the pre-COVID average spend on projects or contracts in the GCC was about $8.2 billion a month. With lockdown, you can see straight from March onward, a very substantial and consistent fall in overall project spending for the rest of the year. So we can see that project spending on a monthly basis was about $3.9 billion on average for the remainder of the year. So there is a very sharp distinction between pre-COVID projects market and post-lockdown or COVID projects market. And you can see that there was a small uplift in June to July and August pretty much in keeping with the removal of the lockdown and a slight return to normality in those months. And then we can see again the slump intensifies as the year drew on, and we went back into more harsher situations with staying at home, lockdowns, and greater number of cases. So again, I don't want to generalize, but overall we can see that COVID has had an impact on overall spending levels, generally speaking. So when we are looking at UAE and Saudi Arabia and the declines in spending there, although there are a number of factors, COVID was clearly a very significant one and probably the dominant one when it comes to project markets performance. Right, let's just step aside for 1 second and also look at the Dubai project market. Now, we all know that Dubai project market has always been critical to the performance of the overall regional performance of the projects market. It has been a major driver of contract activity. At its peak, you can see here in 2016-17, nearly $30 billion of contracts awarded. So it constitutes quite a significant chunk of project spending historically. Now, clearly, when we're talking about Dubai, we are talking about either real estate spending or infrastructure spending, because, of course, there isn't a lot of hydrocarbons investment in Dubai, very few reserves of its own. We can see here the boom in 25 to 2008, then the crash, worldwide financial crisis. We saw a very sharp fall in activity in 29 to 2011. And then as real estate prices recovered and the market recovered, we saw a very big increase in investment, particularly in real estate, between 2013 and 2017. And then over the last few years, we have seen a fairly sharp decline in construction activity, in particular in Dubai. And for sure, 2020 would have been a difficult year anyway. The government created a committee to control new supply into the market. But obviously, COVID-19, falling oil prices and falling sentiment clearly had an impact on contract activity. And last year, as you can see, just $5 billion of contracts awarded in 2020, which is worse even than the slump between 2009 and 2011. So, of course, there are many contractors focused on the Dubai market, had a big challenge with a lack of opportunities and a lack of work over the last few years, especially last year. And so you can read the news about companies going bust or pulling out the region or focusing on other markets. This is really why. So the Dubai market has really been through a tough couple of years, and last year in particular really saw the bottom falling out of it, unfortunately. I guess the question is, will it recover? And I think that's got a lot to do with real estate prices, demand for real estate, government attempts to try and stimulate demand and control supply. But we'll have to wait and see to see how the market performs in the months and years ahead. Okay, let's just make this data a little less abstract by actually looking at the individual projects that comprise the data, or some of the projects that comprise the data. Here you'll see some of the significant projects awarded last year. As you can see, I won't go through them all, but you can see there's power plants, there's relocation of air academies and air force bases, big wastewater treatment plants awarded, airport contracts, defense contracts, and so forth. So a wide mix of different sectors across different countries, but nonetheless, obviously a lot fewer and a lot lower in value in terms of projects awarded in 2020. Who are the most successful contractors last year in terms of contracts awarded in the previous 12 months? A bit of a surprise in first place in terms of work won last year. We actually have a Malaysian firm, Serba Dynamic. It won a major contract in Abu Dhabi to build an IT academic hub, and another big contract to build a massive data center in Masafa. So although Serba's been active in the region in the ongoing engineering and maintenance of projects for many years. This was the sort of first major big EPC type job that it had won. So by virtue of those two major contracts, it's been propelled into first place. Next up, some more familiar faces. Larsen Tuber out of India, a very diversified contractor across all sectors. Been quite successful last year, followed by Saudi Arabia's Nesman Partners. Samsung C&T has won a couple of major power contracts last year, making it quite successful. And then Qatar's Urbicon, which won a couple of major housing deals for Bara real estate in Qatar. And we've got Al Mabani out of Saudi Arabia, WT Vasa Technic, which is building the won the Haman wastewater treatment plant in Kuwait, and then so on. What's quite interesting looking at this list actually though is the absence, bar one company, of the Chinese contractors in the region. Certainly if we look at the wider Middle East, and certainly if we look at Africa, Chinese contractors have been dominant, and one would have expected to see maybe a few more Chinese faces on this rankings, but it just goes to show that local and more established international contractors are still pretty strong in the GCC. Right, in terms of the top clients last year, in terms of work awarded, by far and away the busiest client was Ashghal in Qatar, had awarded more than $5 billion of contracts last year. Huge number of projects in infrastructure, new roads, sewerage, and other infrastructure type projects in preparation for the FIFA World Cup in October next year. I've been very, very busy, and it was by a large margin the most active client. Next up, we have the Ministry of Defense and Aviation in Saudi Arabia, thanks to the relocation of the Aviation Academy and Air Base in Riyadh to outside of the capital. Then, of course, Aramco. Block 7 Investment, which was the client on the Server Dynamic Academic Hub in Abu Dhabi. Private developers, individuals who build their own residential projects is in 5th place. Modon, which is building the big Riyadh City project in Abu Dhabi, and Shamkha South. CAP, the PPP client in Kuwait, Bara Real Estate, and onshore, and so on. I'm not going to go through them all. You can look at those in your own time. Just another reminder, this is being recorded, and we will be able to send, and this presentation will be sent to you in the next couple of days. You will also have access to the video, so you will be able to look at this data in your own time. And as I said before, there will be a free gift at the end of this presentation. If you stick around, I'll give you the details of that. Right, so that's past history. Let's put 2020 behind us. Let's look forward into 2021 and see how we believe the market will perform this year. So first off, we're already in mid-February, 17th of February today. So how's the market already performed in the first couple of months of the year? Is it a bellwether for how the market will perform overall for the 12 months? And this, as you can see here, are the values of work awarded so far. We can see, I guess the standout is Qatar, which has already exceeded 2020 levels, primarily as a result of this massive $13 billion EPC contract awarded last week for the Qatar Gas LNG trains to Chiyoda and Technip. Massive contract, one of the largest EPC deals in history in the region, if not globally. So that's already going to make a huge boost for the Qatar projects market. But elsewhere, you can see still fairly anemic performance. Some $2 billion of contracts awarded in Saudi Arabia, 674 million UAE, 270 in Oman, 26 in Kuwait. So still pretty poor compared with the historical average. So we haven't seen as of yet, on a country by country basis, a significant ramp up in project activity. And we can only hope that the months ahead, as the vaccination programs are rolled out, as life returns to normal, that we will see an increase in contracts being awarded. Let's just look at some of the big contracts awarded so far, most significant ones awarded so far in GCC. As I mentioned, the LNG processing trains to Chiyoda and Technip was awarded last week, $13 billion. And we were hoping that these would have been awarded last year, but they were delayed a month or two, so coming in this year. And you can see some of the other significant projects: Jeddah power plant, solar power plants, part of the renewable energy program. Aramco's Shaib NGL plant, the Malmul gas compression station awarded to Petrofac in Oman. Vida Residences, Crete Beach, I think awarded to ECG, and so on. Dilan townhouses awarded in Dubai as well, which is a significant investment by Majid Al Futtaim. Again, you've got a number of other contracts too, which I won't go through one by one. Right, here we get to the meat and drink of the presentation, which is our forecast for the year ahead. Now, taking into account, when we're doing our forecast, taking into account the value of projects currently out to bid and in tender, we have created this forecast, taking into account only the projects most likely to be awarded this year. I'm looking at them by sector and by country, obviously, and this is what our anticipation is for contracts to be awarded. So we are anticipating, forecasting approximately $114 billion worth of contracts to be awarded in 2021. That's slightly higher than the 2019 figure, and of course significantly higher than last year's number. And as you can see here, we've got a slightly different focus on the country by country basis. For example, in Qatar, we're looking at power sector in particular being a major area of growth. Clearly, gas and petrochemicals will be a major area of spending too. Whereas in Saudi Arabia, transport is a major area of investment, followed by, and in Saudi Arabia, and sorry, in the UAE, we have the gas segment. So we've got clearly very diversified sectors, depending on the country you're looking at, and we're anticipating that Saudi Arabia will be the market leader this year if all goes to plan. Now, of course, this is just a forecast, and you know, we can't you know, guarantee that this is what will happen. But based on the projects out in the market, out to bid, this is what we anticipate how the market will perform. In terms of the projects, individual projects out to bid, just looking at some of these, obviously, some of these are quite exciting, quite major projects, which are expected to be awarded this year. We have largest among them, the Facility E, IWPP in Qatar. As you will also see on here, we have the first 4 major EPC packages in the Hale and Gash Sour gas program in Abu Dhabi. The multi-billion dollar program alongside the Project Lightning subsea power and transmission network for 80 power and ADNOC. If these all go ahead, we will see a significant increase in contract activity in Abu Dhabi, which had a couple of slow years for oil and gas investment. Of course, in Qatar, we've got the LNG programs. We have a couple of other major EPC packages to be awarded on that, both onshore and offshore. And of course, there are a couple of major contracts, as ever, in for Saudi Aramco in Saudi Arabia as well. So there are a large number of projects which have either where bids have been submitted or where bids are going to be soon submitted, which on the basis of probability should be awarded this year, which is encouraging and of course contributes to our forecast. And of course, you can use MEED projects for when you're looking at the year ahead to see what projects are out in the market and to understand better yourselves and individual segments and countries, what markets you expect to perform and what the pipeline is going to be. Right, let's look for longer term and how the market is going to perform beyond 2021, 2022 and beyond. So just to, I think it's important at this point just to look at the drivers, okay, behind the projects market in the not just in GCC, but the wider MENA region and Africa as well. So regardless of COVID-19 and the oil price, we still have a number of important factors. We've got clearly still got high population growth, and when you've got high population growth, you've got increasing need for infrastructure, affordable housing, for investment in power and water and wastewater to serve this greater population. So population growth in itself is a very strong driver for project market investment. And clearly, when we're looking at somewhere like Dubai, where we've seen a decline in project activity, a decline in real estate demand, it's a sort of lack of strong population growth that is hindering the development of projects market. So there's a very clear link between projects market performance and population growth. And I think also, despite 2020 being a very difficult year macroeconomically, we still, by and large, have fast-growing economies. And of course, fast-growing economies also stimulate demand for projects. At the same time, we do have in some places an outdated infrastructure that needs to be invested in. We certainly need investment in power and water capacity and transport capacity. That helps drive investment in projects. And of course, as too does the long-term government visions. So, for example, Saudi 2030 vision is driving a substantial investment in the projects market. You just have to look at projects like Qiddiya, Diriyah Gate, Red Sea Tourism Project, and NEOM to see how they are underpinned by the framework created by government visions like Saudi 2030. When it comes to gas investment or energy investment, if you look at the project's pipeline, you can see each country is investing heavily in gas to become independent in terms of their gas sourcing, gas resources, whether that's new gas developments or importation of gas. We've also got an very substantial increase in renewable energy, particularly in solar energy, and that's a major driver for projects. And then finally, we have, particularly outside the GCC, particularly in Africa and MENA region, but also in the GCC, we have very strong Chinese investment in the framework of the Belt and Road Initiative that is seeing heavy investment coming into the region, particularly in logistics, transport, and infrastructure projects. So bearing that in mind, looking forward, what is the pipeline of projects for the GCC? And it is still, and this is a continual theme, it's still a very massive pipeline of projects in the years to come. In total, we have just under $2.5 trillion worth of known, announced, and unplanned and unawarded projects in the 6 GCC states, considerably larger if we look ahead wider to the MENA region and Africa as well. But we have, alone in the GCC, $2.5 trillion worth of contracts. Now, of course, not all of them are going to proceed, not all of them will be awarded, but if we bear in mind that in the last decade, we've seen $1.5 trillion worth of contracts awarded, then it's very feasible to see a similar number to be awarded over the next decade. Regardless of the oil price, regardless of COVID, we are going to see a very long-term, healthy outlook for project spending across the region. Taking that same data, let's just look at it by sector. And you can see, just like historically, the largest future segment of the market going forward is going to be construction. That's residential, commercial, malls, leisure, university, schools, and so on. More than $1.5 trillion worth of known projects in the construction sector, followed by transport at just under $400 billion of roads, ports, airports, and railway projects coming up. Then power, thermal and nuclear and renewable energy, more than $150 billion of projects, and so on. So there is still a very diversified, broad mix of projects coming up over the next decade and a half in the region. So we can still be broadly optimistic about the future of the projects market in the region. Definitely 2020 was a difficult year, but it's too soon, and we certainly shouldn't write off the projects market in the region. Again, just to reiterate what some of those projects are going forward, just to give you a flavor for some of them. Clearly, the largest project is, of course, the $500 billion NEOM city in far northwest of Saudi Arabia. There have been a few major announcements regarding the procurement and structure of this project over the last couple of months. The infrastructure spine, for example, was been announced. Several high-speed railway and metro networks there. There's obviously a big hydrogen plant going to be planned, and so forth. And then we've got a number of other major projects, which I won't go through too, but across various countries and sectors. Mahmoud bin Rashid City, the Crete Metro, the Zakum full field development, new refinery in Abu Dhabi, high-speed rail between Riyadh and Dammam, and so on, affordable housing in Kuwait, and so on. So, of course, not all of these will necessarily proceed. We can't be certain about anything, but nonetheless, there's still a very significant pipeline across many countries and sectors. So that brings me to the end of the presentation today. Thank you very much for your attention. I will now take your questions, but just to again repeat, we have recorded this presentation. We will send you a copy of it as well. You'll be able to watch it or read it in your own time. We've got your details, and so we'll be happy to email that to you. Now, as I mentioned, we have a free gift prize for you all for attending today, just to show our thanks. If you can please send an email with your signature, your contact details to thankyou@meed.com, regardless of whether you're a subscriber to MEED or MEED Projects or not. We will send you one of these reports, which are detailed, quantitative and analytical look at each country in major projects market in the GCC and MENA region. So these reports we published towards the end of last year, full of data and details similar to what I presented today, but in much more depth across all sectors in each market. If you want to grab a free copy of them, we'll send them to you. Just please email us at thankyou@meed.com, thankyou@meed.com, with your name and contact details, as well as which report you would like to have. As you can see, there's Bahrain, Egypt, Iraq, Kuwait, Qatar, UAE, Saudi, Oman, and Maghreb, and we will send you those reports. Okay, so again, just repeat, email us at thankyou@meed.com, telling us which report you want, and we'll send that to you. Okay, so thank you very much. I hope you found that interesting. Difficult year for sure last year, and I'll be very happy to hear any comments you might have. Feel free to email me or contact me, and I'll be very happy to have a chat with you. But for now, I'm going to answer any questions that you have asked me during the course of this presentation. So if you've got any questions about aspects of the market, let me know, and I will try to answer them in the remaining time that we have. And a good question here is, how do we calculate project contracts? How do you work out the value of them? Well, in most cases, we are calling the market or speaking with the market to get directly from the contractor or consultant or client concerned in the project the specific value of the contract. Either that, or it may well be announced in the public domain, in which case we'll be recording it, of course, from the public domain. But most of the time, we are speaking to the market directly to obtain the contract value for specific projects. Of course, we're helped in some markets like Kuwait, Bahrain, and Oman, where public sector contracts are published in terms of the value, and of course, we then have an official contract value based on the tender board figures. Question here is, what is the expected trend of construction projects in the Northern Emirates of the UAE? So, of course, we know that Sharjah, Ajman, Ras Al Khaimah, Kuwait, and Fujairah tend to have smaller construction projects markets than UAE, than Abu Dhabi and Dubai. But nonetheless, there have been some significant projects. Today, we just saw an announcement by Arada of Intermas winning the Nest project in Sharjah, $100 million contract. So, the activity is still continuing in those markets. Work doesn't tend to be as large in terms of scale of contracts, but there are still a certain number of hotel projects being awarded, residential projects being awarded, and also in the road sector, quite a lot of MOID, infrastructure development, road contracts being awarded too. So there is a fair amount of activity, but certainly not in the same scale as Dubai and Abu Dhabi. Okay, I've been asked a question here about longer term forecasts beyond 2021, looking at 2022 and beyond. It is very difficult to make longer term projections for the projects market. given how vulnerable project markets are to oil prices and other individual situations in each country. Nonetheless, I think if we look at, say, somewhere like Oman, Oman actually has a very stable projects market year on year. I wouldn't expect a very sharp increase or decline in projects activity in Oman. Generally, the Omani projects market stays between $5 and $10 billion of contracts and doesn't exceed that $10 billion figure or doesn't go below it. So I would expect that to remain the same for Oman in 2022 and beyond. I should also let everyone know, if you do want specific forecasts or research done on the projects market, then we do have a consulting division. If you are interested in specific research done on projects market entry, competitor analysis, market sizing, and so forth, then please reach out to me and I will be more than happy to talk to you about that. How did the rail market or rail sector perform in 2020? Well, the thing about railways is that there aren't that many railway projects in the region. Obviously, we've got the Doha Metro and Riyadh Metro under construction and almost operational, certainly in the case of Doha. We don't have a huge number of railway projects in the market right now. One set of contracts that were awarded in the last 18 months is, of course, Etihad Railway Freight Network. All the major packages of that have been awarded over the last 18 months, and that's under construction. But if you're looking at new railway projects, then I would certainly suggest looking at Egypt market very closely. We actually have the PQ exercise out at the moment for Alexandria Metro. We have the fourth line of the Cairo Metro underway, under construction. We've got the monorail project there. And we also have an award due very soon for the high-speed railway network between Ain Sokhna and Al Alamein, which is a very significant investment. So for railways right now, look at Egypt and also other countries in Africa. But in the Middle East, GCC right now, well, we're going to have potentially the red and green line extension of the metro in Dubai over the next 18 months, and possibly the remaining Saudi section of the GCC railway. But it's pretty slow at the moment other than that. Question about, do we have a sector breakup of the contracts awarded in Dubai in 2020? Not in this presentation, but certainly we do on MEED Projects. You can analyze the data, export it to Excel, and look at the individual contract data to assess on a sector by sector basis. But when we are looking at Dubai, the investment very much is in real estate or in infrastructure. By infrastructure, I mean roads or potentially also the water and power sector. So, of the $5 billion of contracts awarded in Dubai last year, most are really in civil construction. A question here on MEED Projects: do we have the ability to see subcontractor relationships with general contractors? Yes, we certainly do. We are recording all major subcontractors on projects, particularly the foundation MEP contractors. And for each company, we've got something like 30,000 companies on the database. For each of those companies, we have a relationship matrix, so you can see which MEP contractors have worked with which contractors over the years, which general contractors have worked with which clients over the years. So we have a quite extensive relationship analysis between contractors and subcontractors and clients and consultants. Here's an interesting question, moving on to oil and gas. How do you see the oil and gas sector in the next 5 years? What do you see for sustainable energy and hydrogen transformation? I'll just talk about the hydrogen situation first, because this has come very suddenly in the last few months in the region. Now, almost every country is very much talking about investment in green and blue hydrogen projects. Of course, we've got this massive hydrogen project planned between NEOM and Aquapower and Air Liquide, using renewable energy in NEOM. Massive hydrogen production to be exported in the form of ammonia to places like Japan, where that ammonia will be converted back into hydrogen for fuel use. Now we're seeing in Oman, we're seeing in the UAE, major plans announced for the production of hydrogen. So that's going to be a very, very fast growing sector. Watch this space for hydrogen. This is going to be a significant investment over the next 5 years. Likewise, renewable energy, solar energy in particular, is a major growth area, and certainly we're going to see far more and far larger solar projects, particularly solar PV projects, over the next few years in the GCC. Oil and gas wise, it is quite, we've had some ups and downs in oil and gas. I think this year is in Qatar, it's going to be a mammoth investment, $28 billion in the LNG program there. It's going to be transform the oil and gas industry in Qatar after a few slow years. In Abu Dhabi, as you can see, Hail and Gasha, Sheikh Gas Cap, Dalma project, if they all proceed, we'll see a very significant ramp up in project activity. Lots of investment in gas, tight gas, sour gas, shale gas in the region, with driving investment in hydrocarbons over the next few years. Aramco, I think 2021 will be a fairly quiet year. No major significant investments that I can see on the short-term horizon, but of course, longer term, we'll continue to see it being the market leader for overall investment in oil and gas. Do you expect to see more contracts in Qatar now that it's more open to companies from Saudi Arabia and the UAE and other countries? Yes, and certainly this year is a very special one for Qatar due to the LNG program. As I said, $28 billion of contracts to be awarded in Qatar this year. So I expect a lot of companies to be focusing on the Qatar market, as an unprecedented level of investment and population growth is going to be as a result of all that project activity going in. So I do expect Qatar to be very much more in companies' sights going forward. The value of contracts for 2020, is it only for the full year? So the presentation I showed for 2020 is for full year 2020. So as I said, $63 billion for 2020 compared with just with $110 billion the year before. So a very sharp fall in project activity in 2020. Someone's asked a question about Kuwait. What is the CAP project that makes it the 6th largest client last year? Well, CAP, the Kuwait Authority of Private Partnerships, was the 6th largest client last year due to the award finally of the $1.6 billion Kuwait wastewater treatment plant, which was awarded to WTE Wassertechnik. So that makes it, it was a very slow year overall for many clients. That's what makes it in the top 10. Question, how does 2021 compare to previous years? Well, if our forecast is for $110 billion in 2021, that puts 2021 on par with 2019, 2018, 2017 levels. Obviously much higher than 2020, which was an exception, but 2021 we expect it to perform similarly to 2017 to 2019 period. Are we going to see a spike in Qatar projects market due to Doha hosting the 2030 Asian Games? Well, yes, I think we've certainly seen a spike due to hosting the 2022 World Cup. So I expect to see a similar increase in investment towards 2026, 2027 for project activity in Qatar as a result of the Asian Games. At this point, I would like to just speculate that I have a feeling that the UAE is going to put a proposal forward to host the 2032 Olympic Games and or the Rugby World Cup in a similar time frame. I have a feeling that these will be used much like the Expo was used to try and stimulate investment in the country. I have a feeling that we are moving towards that point, and I expect over the next couple of years, just pure speculation, that we will see some sort of announcement about that in the next couple of years. Okay, I see in the 2021 forecast, most of the projects in Kuwait will be in construction industry. Please advise which projects you are referring to. So for 2021, when we're looking at construction in Kuwait, we are looking at primarily at the Public Authority of Housing Welfare's affordable housing projects in Kuwait. So South Al-Mutla, Jabal Ahmed, Sabah Al Ahmed cities programs, huge amount of investment, public investment in these public affordable housing projects, and that's what's going to drive investment over the coming months and years. How does your forecast match with the fact that Aramco officially has announced they will reduce their capex by 40 to 50% in 2021? Well, I think our forecast does match that. We are, as I just said, we are not forecasting any major APC programs by Aramco in 2021. As I said, the focus is going to be for ADNOC, the Hell and Gasha, Dalma and Shaif gas cap programs, as well as downstream at Emirates, the refinery program there, and in Qatar, of course, the LNG program. So yes, we're not forecasting a substantial growth in oil and gas activity in Saudi Arabia this year. Good question here. How do you expect the expat exodus affecting the projects market in the short to medium term? Well, clearly, if you look at somewhere like Dubai, any decline in the expatriate population, I think S&P just came out with a figure of 4% decline in population in 2020 due to COVID and the fall in economies and job losses. In the short to medium term, clearly that's going to result in a lower demand for real estate and falling real estate prices in the UAE. So I think in the short term, it's going to affect construction projects in Dubai and Abu Dhabi. However, in other markets which are less dependent on real estate spending, I think it's going to have much less of an impact. So depends is the answer to that question. And of course, as we can see, the government in UAE through its through its nationality program, its new visa programs, is doing its best to try and grow the population, stimulate business, and therefore jobs and population in the UAE, which will hopefully have a positive impact on construction spending. But it's difficult at this point to see a major uptick in construction investment and spending in the UAE for next year or so. Why do we not see Kuwait expected to pick up over the next few years? Well, Kuwait's always been an underperforming market, despite its oil wealth and undoubted need for infrastructure and housing and so forth. It's always struggled politically with moving ahead with projects due to parliamentary bickering over spending, releasing spending on projects. And that's really just always been a consistent issue with Kuwait and holding back its potential and foreign investment. So just as that's held back project spending in the last few years, that's going to hold back spending over the next few years, in our opinion. Has the market drivers taken into account country spending budgets for this year? Yes, although it's important to bear in mind that you have to sometimes distinguish between country announcements around their budgets and actual project market performance. Sometimes because that's a lot of market is driven by the market is driven by private sector investment. Other times it's driven by PPP, or other times the budget can be disingenuous in that it doesn't actually, it's spending over time, and it's therefore 5-year budgetary spending you need to look at rather than necessarily year-by-year spending. But if we take into account somewhere like the Qatar Gas LNG program, then a lot of that is project financed or export credit guaranteed finance, and therefore budget spending doesn't necessarily reflect how the market is going to perform. And you also, of course, have the situation where sometimes countries underspend on projects or overspend on their budgets. So that's also a factor. So it's not always necessarily reliable just to look at budgeted spending in budgets to understand how the market will perform. Question about ADNOC. ADNOC is selling its stakes to various IOCs. Sorry, the question has disappeared. Hang on. I've got so many questions, I'm trying to keep track of them. How will these projects be realized? I think if ADNOC is selling stakes in various concessions to international oil companies, that's a positive thing overall because it gets external financing, it brings external expertise into these projects, and it provides probably a little bit more confidence that these projects will proceed. And certainly if we look at the investments made over the years, and that's something that's coming into reality. So I think an investment by an international IOC tends to suggest that there's a little bit more certainty about a project proceeding to investment. Okay, so Are there any other factors affecting the forecast in 2021 or 22 other than COVID that could affect the market? Well, I think obviously the one, well, perhaps two overriding factors. One is like these black swan events, such as COVID or such as geopolitical events that could have a short-term impact on the projects market, either negatively or positively. For example, in the last 10 years, we've had the World Cup announcement and the Expo announcement, which have positively affected the projects markets. At the same time, we've had geopolitical events, oil price falls that have negatively impacted the projects markets. So we should always expect the unexpected in what is quite a volatile region. But probably the most anticipated, I guess, threat to projects market overall would be continuing declines in the oil price. Certainly, there is tends to be a correlation between, as you would expect, between oil prices and projects market spending. Will the Qatari decision to go ahead with the LNG program affect Hail and Gash and Dalma gas projects? I don't expect so, no. I think if you're looking at somewhere like Abu Dhabi, and in fact across the nations of the GCC, the driver behind investments in sour gas projects or in gas projects is a need or a requirement to be independent of gas imports. And I think if you're looking at whether you're looking at the Shell gas program in Saudi Arabia or the Hail and Gash sour gas program in UAE or the gas program in Kuwait, it's all very much about finding new sources of gas to reduce dependence on imports and to burn gas for power production rather than fuel oil, and also to use this gas for industrial and petrochemical purposes. So I don't expect there to be a relationship between decision to go ahead with Qatar gas LNG program and the gas projects in Abu Dhabi. I think they will all proceed. Okay, question about PPP projects. Is there a trend for more BOT and PPP type projects? Yes, so one of the things that we've seen over the last year is an increase in PPP projects, particularly in newer sectors which haven't had PPP projects before. In roads, in schools. We've seen the schools PPP program awarded in Qatar and in Saudi Arabia. We've seen road PPP programs now emerging, university and healthcare projects as well. So as budgets are reduced, oil prices fall, governments are increasingly looking at different ways to implement their projects. So one of the major trends emerging has been this substantial increase of emerging PPP projects and also awards of some of these new PPP projects. So across every nation now, I do expect to see more and more PPP financed, developed and operated by the private sector. And this is going to be a trend that's going to continue. Can we choose more than one report as part of the free gift? Unfortunately not. It's limited to one report per attendee. So as I said, email us at thankyou@meed.com and tell us which report you want with your contact details, and we will email you the report of your choice. So it's thankyou@meed.com. thankyou@meed.com. Is the 2021 contract award forecast based on the estimated contract award date in MEED projects or further manipulation analysis of those projects? That's a very good question. I created the forecast not solely based on estimated contract award dates, because as we know, projects do get pushed back, do get delayed. Instead, we've attached far more weight to projects which are in the final stages of bid evaluation and or tendering. Because we believe, regardless of the official award date, these have the best chances of being awarded this year and actually having an impact on the 2021 contract award levels. And that's a methodology that has worked quite well for us in the past, has been quite accurate, and so it's something that we've used also for the 2021 award date. Of course, though we are in a very volatile situation, things are changing very rapidly, And so we can't, at this point in February, provide a huge guarantee around these numbers, but we're fairly confident that this will be how the year will pan out. At the moment, we don't have a best and worst case scenario for those. I would say, though, that the worst case would be figures similar to what we saw last year, around $70 billion mark. In the best case scenario, I would anticipate that the upper limit would be about $120 billion, and no more than that. Question about transport and construction of the transport infrastructure. Is transport only for rolling stocks and systems, and infrastructure of a transport system included in the construction? No. Construction is when we talk about construction sector, we do not include any element of the transport project in that construction field. So the laying, for example, of railway tracks, or the construction of stations, or the construction of bridges for railway lines, for example, or interchanges, will be purely in the transport segment only and not in the construction sector. A question about funding and liquidity in the market for projects, and do we expect more funding and liquidity to be made available? Clearly we've had a challenging time with macroeconomy the last 12 months, and we've seen some tender bonds, performance bonds pulled. We've had some companies challenged in terms of being able to obtain letters of credit, or finance guarantees, or even tender guarantees from the banks, and so forth. And of course, contractor financing has been challenging. As you might expect in a situation like this. However, the banks are still keen to contribute to projects and to help finance them. So I'm hopeful, especially as the oil prices are now recovering to $60 and barrels and above, that we will see an improvement in general liquidity levels, and I expect to see an improvement over the short term. I'm conscious that I'm running out of time. I've got nearly 100 questions, and so I'm clearly not going to be able to answer all of them, I'm afraid. If you do wish to have a specific question for me or about MEED Projects, then feel free to contact me. My email address is edward.james@meed.com, and I'll do my best to try and answer any questions that you might have. I'll take one last question. A question about projects on hold. Some projects were put on hold in 2020. What is the forecast for these projects starting again? Of course, do have a lot of projects put on hold last year for obvious reasons. Many clients wanting to see how the situation will pan out before proceeding with them. Only natural, and of course that's a big reason for the decline in project activity last year. What I would say that is last year and over the last 3-4 years since the project market has been declining, what we have seen, compared with 2009, the global financial crisis, is that we haven't seen a large-scale cancelling of contracts and of projects. 2009 was very different. We had a lot of speculative projects. We had a lot of projects which weren't necessarily viable. Unlike today, where any projects which have been announced and launched have had a lot more thought put into them. They're much more commercially viable and feasible, and therefore the situation that drives, or the underpinning driver of these projects is still there, more or less. And so we haven't seen this big cancellation. We have seen projects put on hold. And one of the reasons why we can be fairly hopeful for 2021 is that a lot of these projects which were put on hold in 2020 are now just being pushed into 2021. And so we do expect to see a large backlog hopefully being awarded this year, and that should provide some hope and optimism for the year ahead. So I'm very sorry I haven't been able to answer all of your questions, and please feel free to email me them and I'll do my best to answer them. Likewise, please don't forget to get your free report. Please email us at thankyou@meed.com with your contact details, telling us which report you want, and we will send you that report for free. The report will be free. Tell us which one you want, and we will send that. We will email it to you, that particular report. All right, so as a gift for attending today, we'll be sending you those reports. Sorry, I haven't been able to answer all of your questions. As I said, email me at edward.james@meed.com. I'll do my best to answer any questions you might have. So thank you very much. We will be sending you this presentation the next couple of days. There will be a video recording of it as well, which you'll be able to look at. And I hope you found it useful. I hope you found it informative, and I hope it helps you in some way guide your business over the months or years ahead. I wish you all the best for 2021, and I look forward to again being able to present to you in the next few weeks when we'll be looking at another topic. So any recommendations or suggestions from you and what you'd also like us to talk about, that would also be gratefully received. Thank you very much, and I look forward to speaking to you all again soon.